Namaskar, and thank you for joining us here on this week's program, The Economic Brief, where we put together stories drawn from the business-related ecosystem, both local and global. On the program, global ratings agencies hail India's budget 2026 for fiscal discipline, growth-driven spending, and long-term economic narrative. Gold prices continue to rise as central banks buy big. Silver, though volatile, could rebound on industrial demand. Balochistan's poverty and unrest expose Pakistan's deepest development divide in the resource-rich yet neglected region. And Spain says it will grant legal status to undocumented migrants. They want to tackle labor shortages amid aging population. Before we move on to our top story on how global rating agencies have looked at the union budget, let's listen to India's Commerce and Industry Minister Piyush Goyal. He's speaking about the India-US trade potential. The US has reduced tariffs on Indian imports into the United States to 18%, and Piyush Goyal sees an upcoming agreement as the best in the region. Let's get the big picture.
Will protect the sensitive sectors, the interests of our agriculture and our dairy sectors in full respect, opening up huge opportunities for our labor-intensive sectors, export sectors in textiles, plastics, apparel, home decor, leather and footwear, gems and jewelry, organic chemicals, rubber goods. India's demand is continuously increasing. Our demand for ICT products, our demand for data center equipment, our demand for high quality technology and innovation, our demand for raw materials is continuously rising. And in that situation, this deal also opens up opportunities for India to get the best in class, world-class technologies to further power the India growth story, the Indian economy.
Well, India's demand for the best is continuing to rise, and global rating agencies are noticing India's economic potential. And let's take a look at how some of them have viewed the budget 2026. They broadly praised India and also because of the fiscal consolidation, growth-oriented spending that the budget has described, and India's long-term economic narrative. That's broadly what they've all said. Let's look first at Fitch Ratings. Now, Fitch Ratings has, of course, welcomed the gradual fiscal consolidation. Fiscal consolidation is not quick. It is gradual, 4.4 to 4.3. It's praising the strong spending on infrastructure because if it's quick, it means that you're slashing on expenditure. The government is not slashing on expenditure. It's prioritizing expenditure on infrastructure. The budget is supportive of medium-term growth as a result. So we can see that that's going to encourage private investment as well. Let's look at Moody's. Moody's has also commended the commitment to debt reduction, an important aspect. It's praised the CapEx, which is about 12.2 lakh crore rupees, and also manufacturing growth as a driver is what they say, because manufacturing is largely being driven by the PLI diversification, and there are 20 sectors, about 2.9 lakh crore rupees have been put into that for the PLI scheme. This is strengthening India's supply chain. And then, of course, there's fiscal discipline, which is what other agencies have also talked about, a positive signal for investors. Let's move on to what Morgan Stanley has said. Morgan Stanley is looking at sectoral reforms in defense, auto, manufacturing. These are important. We can see we already described about manufacturing, but defense. Why is defense important? Defense is important because we are dealing with geopolitical uncertainties at this current time, and also self-reliance in defense is going to create a large number of jobs. it's also going to help, strengthen the economy. And then there is, the budget is reinforcing India's growth narrative. We're looking at manufacturing, especially in auto. That is important because India has a huge potential there. We are seeing that. That was also unleashed when the GST reforms took place, and we saw a lot of demand for EVs and other vehicles. But EV demand is, it's latent still, and there's plenty of potential there. And there is a positive outlook given for reforms, because reforms are like accelerating in these fields. Let's move on to our next view, which is from Goldman Sachs. They're also optimistic about the earnings upswing. Why are the earnings going to go up in 2026? Corporate earnings are going to go up. There is a rebound that we are seeing. There is a general feeling that earnings are going to be up about 15% in 2026 from about 10% the previous year. And there is policy stability, which is boosting this investor confidence. We also are seeing that why is this happening? Why are earnings going up? Because there is value-driven markets. I mean, our producers are seeking more value from the market, and we are seeing that also with trade deals. Consumption, reforms also to strengthen growth. Consumption is the domestic demand, which is always, propping up the Indian economy. So let's look at Nomura. And Nomura says that India's growth has a growth-oriented stance. They look at the budget that way. Again, talking about infrastructure spending being encouraging, and the rising household income is also important. Fiscal consolidation, again, they are saying is supportive for stability. Stability is very key to getting in foreign investment into the country. So there have been other agencies also, and let's take a concluding view, a general view of what all these agencies have been talking about. They say that the budget is tactical, it's disciplined, very well thought out budget, and disciplined because, of course, of the fiscal consolidation path, and emphasizing a stable outlook. Stability is important for any economy, and we all know that, India is a prime emerging market, which is huge opportunity for investment. It's like prime real estate in a sense, prime emerging market, and good for investment. So balancing growth and fiscal discipline. That, in a sense, is what we can get from this budget. But, we'll move on to our next story. And before I introduce you to our guests, let's take a look at this story. The IMF had upgraded growth forecasts for the UAE and elsewhere because of greater private sector participation and also the resilience of the global economy to blunt trade shocks. So the IMF's managing director, Kristalina Georgieva, was actually speaking recently at the World Government Summit in Dubai. Let's listen to what she said.
A world that is more diverse, more multipolar, and more resilient as a result. In fact, we just published our projections for global growth for this and next year. We upgraded these projections, including for UAE, for the Gulf countries, because one, private sector everywhere, agile and adaptable. Two, the trade shocks that we thought may come is muted. Three, incredible enthusiasm about the potential of AI to lift productivity.
Well, we're joined by Dr. Amit Kapoor, well-known economist, expert on competitiveness. Thank you very much, Dr. Amit Kapoor, for being with us. Now, what do rating agencies actually look at when they are assessing a budget?
So typically, when you talk about rating agencies, they are always going to be looking at the quality of investments and the quality of spends that you're really looking at. One. The second is in terms of the deficit that you actually have. And these are two very important points that we are really looking at within this budget. So one is, of course, if you really look at as to how they would have actually said positive things about India, there are two set of underlying principles that come across very, very strongly. One is CapEx remains the anchor. That is, the capital expenditure has remained the anchor. In fact, even if we are talking about fiscal consolidation, India has not reduced the level of spends that had to happen on CapEx. They remain at 3.1% of the GDP, and that's a very, very strong motivation. So what we are seeing is that there is a slower trajectory towards slow fiscal consolidation, and that means India is continuing towards investment in the whole set of infrastructure, etc. And this importantly, what happens is the second thing on this is the quality of adjustment. The quality of adjustment is in terms of that how you are even consolidating or the gradual tilt towards capex is very, very important. So these are the factors that they've looked at. And of course, the long-term trajectory and what these kind of investments will do to the long-term trajectory for the government. And having said that, like what we are really seeing here is in terms of the investments that have happened, there are three factors: direct, indirect, and induced impact that these factors will create. Because what I really see is a huge impetus on direct, indirect, and induced impact because of these sets of actions.
Dr. Kapoor, also, Morgan Stanley is happy with the reforms accelerating. How crucial is this, from the tax point of view?
So when you say reforms accelerating and a tax point of view, you would say that, okay, now there is that income tax aspect or the GST aspect. For me, I think the important factor is the GST. Because when your reforms are continuing, there are two things that are going to happen. One is, of course, the investments increase. The investments increase, the jobs become better, the income levels become better. And you yourself said in your program in the beginning that there is a likely increase of 10 to 15% in incomes over a period of time. And we are already seeing that data. That is coming across from, say, periodic labor force survey. So what we are seeing here is that the consumption is going to increase. That is going to affect the GST collections. Of course, there was a huge cut on GST that happened in the last year itself, sometime near Diwali season when the Prime Minister had announced it. So that was actually anticipating lower sets of taxes or whatever. But I think broadly, it does have a blip to begin with. But what we are seeing is that the consumption cycle will increase. So that is the impact that happens. And so when Morgan Stanley is saying that this is going to have a positive impact, yes. But there are other challenges that we will have to look at sometime in the future in terms of saying as to how do we increase the tax base, etc. So those are separate issues that will actually emerge and need to be tackled with.
Stay with us, Dr. Kapoor, for our next story as well. Gold is glittering brighter than ever, surging past $5,500 an ounce as the central banks and everyday buyers are also rushing to secure the safe haven metal. Now, silver, meanwhile, has been reeling from a sharp crash, but it's also rebounding on industrial demand, keeping the precious metals firmly in the spotlight for 2026. Here's the gold and silver economic brief. Gold and silver are once again in the spotlight as investors weigh global uncertainty against industrial demand. Prices of gold surged to nearly $5,550 per ounce in late January 2026, marking a more than 250% rise over the past year. Much of this strength comes from central banks, which are now absorbing 25 to 30% of global production annually as part of their diversification away from the dollar. But the average man is hoping to cash in too.
I can convert into a jewelry if I want, and I can even have it. So it's an investment and also a sign of luxury if I want to use it.
It's more like my family. My family's been investing for a few years now, and I kind of want to start investing now that I'm old enough. And yeah, because I've seen the value gone up recently, and it's fluctuating. But I know that in the future it will go up and increase in price, which I will get a profit out of.
With geopolitical tension simmering and monetary policy in flux, analysts say gold is consolidating after its record highs, but the bias remains upward.
Gold will be around for a long time. It is a safe haven asset, and its little cousin, silver, again likewise. If there was a major supply jolt in gold, then we would expect both gold and silver to sustain at the current levels. But we are not aware of any major supply issues.
After one of its steepest crashes since the 1980s, silver is trading near $36 per ounce globally. Margin hikes and profit-taking triggered a sell-off, leaving silver volatile and under pressure. Yet the medium-term outlook isn't all bleak. Silver's industrial role in electronics, solar panels, and electric vehicles means demand could rebound as manufacturing and clean energy growth accelerate.
After the drop, I feel like this is the best time to buy off everyone. People keep dipping. I believe we should buy more.
Gold looks onward and upward, supported by safe haven flows and central bank buying. Silver remains downward in the short term, but could turn upward if industrial demand kicks back in. In 2026, precious metals are set to remain a barometer opportunity. The Economic Brief, DD India. Well, Dr. Amit Kapoor continues to be with us. Dr. Kapoor, you know, young investors are thinking long-term about gold investment. Does this metal's value ever fall?
Well, I think if you really look at the last 50 years, the metal prices have not fallen. They've always consolidated. The only thing that has happened is the rate of growth that we have seen. So I think when you're talking about youngsters and investing, and if they have the staying power for the next 5 years, 10 years, or 15 years, it is effectively going to be a very, very positive asset to invest in. If you really look at the price of gold, it has effectively increased about 20 to 25 times in the last 25 years. So there is a huge thing that happens, or shift that happens on that. As an investment, great strategy, but if you're really looking at speculating, not the right time. But yes, as you said in the program, there's an important factor that there is a lot of speculation that has happened on gold and silver right now, but over a longer period of time, I really don't think that these prices are going to crash down or something. There would be some level of semblance of reality coming in, but it will be around the kind of price points that we are talking about.
And how long will central banks continue to buy gold?
Oh, I think there is this very important factor that we're really talking about, this whole crisis, the trade crisis that we are really looking at, and the currency is becoming very volatile. It makes a lot of sense for central banks across the world to actually consolidate their assets and keep on buying it, because gold becomes a very important asset to really, take care of currency shocks, etc. So that is going to continue to happen. I think once the trade scenarios and the global headwinds really stop, that is when things will start slowing down in terms of investments in gold. But right now, it remains a very, very strategic asset. And it will continue to happen. If you've really looked at the world in the last 50, 70 years, gold has always been the most important asset for governments to really look at.
We'll leave it there. Thank you very much, Dr. Amit Kapoor, a senior economist, expert on competitiveness. Thank you for joining us and helping us understand this. Now, moving on to our next story, Balochistan is once again at the center of Pakistan's security as well as economic debate. The Baloch Liberation Army's coordinated attacks has drawn fresh attention to a province which has long been described as paradoxical, because Pakistan's largest and most resource-rich region is also its poorest. Behind the headlines of violence lies a deeper story of neglect, underdevelopment, and simmering discontent. Here's Anu Kaushik's report.
Balochistan is in the spotlight again, with the Baloch Liberation Army launching unprecedented coordinated attacks across the province. Balochistan is Pakistan's largest and most resource-rich province, yet it's the poorest region in the country. According to most recent data, 70% of the population in Balochistan are identified as multidimensionally poor. 17 of 36 districts in Balochistan are listed as vulnerable. At around 40%, the literacy rate in Balochistan is the lowest among all Pakistani provinces. According to the Baloch Students Action Committee, 70% of the schools throughout the province are non-operational. Balochistan also has the lowest budget allocation among all provinces. Agriculture is the backbone of the economy, with estimates suggesting that it contributes over 40% to the province's GDP. The figures are in stark contrast to Balochistan's mineral resources. It is home to Pakistan's largest gold and copper mine. It is also rich in natural gas and coal. Balochistan has over 70% of the country's total coastline. In recent decades, China made massive investment in the province through the China-Pakistan Economic Corridor. But the project has caused discontent, with Baloch groups accusing the government of exploiting resources that belong to the local population. In 2025, Pakistani government passed the Balochistan Mines and Minerals Act to bring the mining sector under the federal authorities' control. The sector has been under the provincial authorities' control. But the act's implementation was put on hold after opposition by local leaders. Despite having mineral wealth, Balochistan lacks development. Its history has been defined by conflict, neglect, and enforced disappearances. With camera person Kumar Datta, this is Anu Kaushik reporting for the Economic Brief, DD India.
And across Spain, hundreds of thousands of undocumented migrants are set to gain legal status in a major economic move. The government cites labor shortages and an aging population. Up to 500,000 people could benefit. Critics warn that it also may strain housing and public services. Diptanshu Kashyap has this week's final brief. Thanks for watching. Namaskar.
Thousands line up outside foreign consulates, paperwork in hand, as Spain moved toward one of the most consequential economic decisions in Europe, legalizing 500,000 undocumented migrants. The socialist-led government says the move is driven by hard economic reality, acute labor shortages, a rapidly aging population, and the need to sustain growth.
500,000 people we live with every day, at the market, on the bus, at our children's school, people who care for our parents, work in the fields, who have built hand in hand with us the progress of our country. Spain is above all a welcoming country, and this is the path we choose: dignity, community, and justice.
Under the plan, migrants who have lived in Spain for at least 5 months, have no criminal record, will be allowed to live and work legally nationwide. Madrid estimates up to 500,000 people from Pakistan, Colombia, Peru and Honduras could benefit, pulling workers out of the shadow economy and into the tax system, even as the decision ignites debate over demographic impacts.
I came to UK for studying the MBA. I have done my chemical engineering from Pakistan. So due to high fees and immigration policies, it's not able for me to survive there and just to study there. So I just came here in this Spain because there are different ways for immigration here in this Spain. And we are very happy because government just opened the immigration for the illegal peoples.
Spain's government says the regularization is rooted in mounting economic pressure. With an aging population and slowing workforce growth, official estimates show Spain needs around 300,000 additional workers each year to sustain output, fund pensions, and stabilize the welfare system. The policy comes as Spain posts one of the strongest recoveries among major EU economies. Growth is projected near 3%, while unemployment has fallen below 10% for the first time since 2008, although Spain remains one of the top 5 European nations with the highest unemployment rate. Much of the recent job creation has been driven by foreign workers, particularly in construction, agriculture, hospitality, and care services. But the scale of the move has raised political and demographic concerns. Estimates put Spain's undocumented population at nearly 840,000, up sharply from less than 110,000 in 2017. Opposition parties warn the policy could strain housing, healthcare and public services and act as a pull factor for future migration. Opposition leader Santiago Abascal has called for stronger border controls, warning that failing to act would betray the country. The government insists this is not an open-door promise, but a one-time correction aimed at formalizing a workforce already deeply embedded in Spain's economy.
As much of Europe tightens borders, Spain is betting on integration to drive growth. But the policy has stirred domestic backlash with concerns over housing, healthcare and public service. And as elections approach, the government is facing the challenge of balancing migration policies with public sentiment. In New Delhi with camera person Monty Singh, this is Diptanshu Kashyap for the Economic Brief, DD India.